Today, we are tackling one of the most nerve-wracking, gut-wrenching situations that happen all year, not just during tax season. It is called the income tax audit. I know, hold on, nobody wants to hear about it. My name is Carla Dennis, and I need to make sure I educate you on what you need to be doing to avoid red flags, to avoid getting audited. But before we jump in, I'm gonna need you to like, comment, and subscribe because I don't want you to miss out on any of this audit-proof information. Now, let's get after it. So let's start by just identifying some red flags that trigger audits. One of the most common red flag is when taxpayers take deductions and they round off their numbers with zero. Everything is $400, $3,500, $70, $80. I've never seen expenses come out to even zeros. If you think that that's helping you, it is not. That is absolutely a red flag for an audit. Another common red flag for an audit is inconsistent tax deductions. When you own a business, why should your business expenses change from one year to the next? Yes, you might add some additional expenses, but you should pretty much be utilizing the same categories. When there is too much discrepancy on a tax return, that will trigger an audit. In addition, when there's more than a 5% variance on a tax return, that may also be flagged for an audit. So make sure that when you're filing your taxes, that your tax professional is doing a comparison to see if your tax return is going to get submitted in the red lane or in the neutral lane. Let's talk about the power of organized records. You will never hear me say, do not track your expenses. I am always going to say, document, document, document. Keep track of your receipts. Keep track of how you paid for those deductions. And yes, you need both the receipt and the means of payment. Whether you paid by credit card, debit card, Venmo, Zelle, or whatever the mechanism was, you need that plus the receipt. That is very important. Why? Because the tax code states that you need to have both. So make sure that you have both. Make certain that you keep track of it all year long. Some of you keep track of your expenses just towards the fourth quarter because you're going, oh my God, tax season is coming. I need to start tracking my expenses. You gotta track it all year long. Start right now by going back to any vendor you use and pull your receipts. Go into your email and get those receipts that are emailed to you and print them out and keep yourself an audit-ready binder. In the event that IRS knocks on your door, you will be ready to handle it. I highly recommend that you do a review prior to filing your taxes. You can ask your tax preparer for a pre-filing checklist that will give you all the common deductions that taxpayers take in certain categories. For example, if you're itemizing deductions, it will check off for you mortgage interest, property taxes, DMV fees. Those are very helpful. In addition, if you have consistently filed with the same tax preparer year after year, that tax preparer can give you a pre-filled checklist that will show you what you put last year in that category so that you will know that that's probably a category you should have for this year. As an example, if last year you had $12,000 in mortgage interest and that mortgage interest was from Bank of America and you didn't sell that house to get rid of it, you know this year when you're filing your taxes, you're probably going to have that same document and that same interest that needs to go into your taxes. It helps you not to forget the things you need to give to your tax preparer to make certain you have a complete and accurate tax return. Consistent organization is the key. I tell all of my taxpayers to keep track of their deductions every single month. When the month closes, go back, gather your receipts, gather the deductions, and make yourself a note. Print out your bank statements and highlight the things that you want to deduct. But if you find yourself in a tax tangle and you need to gather everything for a whole year, use my 12 by 12 system. This is where you take all 12 months of the year, you gather all 12 months bank statements, all 12 months credit card statements, and you take one day to go through January, one day to go through February. So 12 by 12 will give you 12 days to go through 12 months of your expenses, preventing you from being overwhelmed. You know that right now, the IRS's budget is being cut. As you know, right now, a lot of the government agencies are getting their budgets cut. That is why IRS is going to be going after audits more than ever. They're going to need to generate more revenue for their department and other departments of the government. So it's going to be so important, my friends, that you do not do anything that is going to trigger a red flag, that you make sure that your numbers are consistent, make sure you stay away from zeros, make sure you keep yourself organized, and make sure, now that you know better, that you opt to do better by liking, commenting, and subscribing to this channel so you don't miss out on any wealth building information. Now go get after it. And as a bonus tip, one of the number one ways that taxpayers get audited is when they file their tax returns themselves. When that tax return goes in and doesn't have a professional license on the second page of the return, make sure you get away from that DIY.